Bombora is a managed fund. We set it up about 8 years ago, the strategy, to try and find what we call sort of emerging growth, really cool companies that have been started up by their founders, often backed by professional, institutional money over the years as they've got to a point. And then we come in and then apply another round of funding and then take them through an IPO process.
90 Seconds is a video creation platform. It enables brands, some of the biggest in the world, to run film shoots and produce video content all over the world using local creators. In terms of building this company, we started in about 2010 and 11, completely self-funded with the likes of myself and other founders, got us through the first 3 or 4 years. Then we moved into venture funding in around 2016. We were lucky to partner with the likes of Sequoia Capital, Airtree out of Australia, and others. That took us on a path where we got a lot of funding into the company and got a chance to really grow and expand. In terms of our journey as a company, we've hit the 10-year mark, and we want to get to the point where we can get an exit for some of our earlier investors and get the company on a path to long-term sustainability. Now, as a Singapore headquartered company founded in New Zealand, it seems a bit strange that we might be looking at an IPO on the ASX, but enter Bombora. Bombora have listed multiple companies on the ASX. They focus on growth companies that are later stage in their cycle. This latest move with Bombora shows that there's an alternative path once you go past venture capital. Now, we all hear about the big VC stories and they're very evident. They become household names. In terms of some of the big benefits you're going to get from a deal with Bombora, if you're looking ahead with your company, you're past venture capital, you're probably going to need to look at expanding in some inorganic ways. So you're going to grow your existing business, investing in product development, market expansion, and that's what we're doing in all the key regions that we're in and deeply investing in our platform. But secondly, we're looking at acquisitions. Now, we haven't completed an acquisition and we don't have anyone confirmed, but we've got 2 acquisitions in our sights and one which is very far along. Now, the only reason we can make that acquisition happen is because we've done our Bombora deal. The company's got fresh cash in the bank, it's got all ordinary stock, so it's a lot easier now when you buy a company, you can buy them with your stock and your stock has this value. And the stock's a lot more valuable than it was before when you had preference stock because everybody's on the same level. It's all ordinary stock.
Our work up in around places like Singapore has led us to understand that since 2010, there's a wash of high quality emerging growth businesses that have been backed by VCs up to this point in time. Now, when those VCs have invested over the years and you're sort of 5 to 10 years into that cycle, it means that the VCs need to find a pathway to exit. If they're not big enough to sell to the strategic player, or frankly, if they haven't already been sold to a strategic player, then the ASX is a fantastic option for them.
In terms of other companies and founders in Southeast Asia, we're really setting the scene and showing what can be done. I'm happy to speak openly about the process we've gone through with Bombora and the outcomes we've already got to date. I'm a much happier entrepreneur than I am today than I was a year ago prior to do this deal. We had some challenges in the company like you've probably got in your company, but we had a lot of opportunities.